All right, welcome everyone. Today I'm going to take a look at Oracle's Q1 2026 earnings. I want to understand what was the driver for the increase in the share price. And I'm going to share with you how I analyze stocks, well, using AI. So I'm going to go through the earnings call and I'm going to extract the upside and the downside. And I'm going to share it with you. Of course, I'm going to look at fundamentals. And I'm going to look at price action as well, even though there isn't much to say. I mean, shares are up by 30%, I believe. Let's do a quick check. Right now, 31%. The highest was 43% yesterday, which is crazy. And, well, to be honest, if you look at the previous breakout beyond what seemed to be a resistance, you can see the price is always coming back to that previous resistance level, whatever that is, and then it continues to run. So possibly we're going to see a pullback over the next few days. I don't think it's going to come down to 260. I think the volume was ridiculous. I mean, if you look at the historical volume, the last time we had that much volume was back in 2013, and possibly that was around earnings. It was a big sell-off apparently here, here. I don't know. That's a lot. And back then the price was how much we're talking? $25 per share, and now is 10x, more than 10x that. So that's the reason why I think it's going to come back a little bit, but possibly not to retest the 260s. The volume was too high, so I don't think people are going to take profits in one day. Most of them, some of them, yes. All right, I want to start with the upside analysis. So I have a script, that I use for the earnings call. I'm gonna share it with you. Actually, I have an app about to be released on this, so you're gonna love it. And well, that extracts what is the upside that was discussed. RPO was the main point, 455 billion in total, up 360% year over year. Sequentially, it was up by 317 billion, and cloud RPO was up 5x. This is the key. So when you look at the company's segments, cloud is the one that matters the most. Why? First, cloud and license, all right, and this is according to the fiscal 2025, which is a very strange fiscal year. It's a very weird way to report earnings. I don't know why they don't normalize it to other companies. So their fiscal year starts in May 2025. So fiscal 26 began on May 2025 . Weird, huh? So cloud and license back then was 86% of overall overall revenue. And when we look at a further breakdown of cloud and license, so we have cloud services, and these are subscriptions. This is the important subsegment, because here we have infrastructure OCI. So this is Oracle's cloud infrastructure. And this is the segment that provides computing, storage, networking, and autonomous databases to its customers. This is the segment, particularly on compute, where the company is seeing an absolute abnormal traction. And you can see who are the suspects. So the multi-year cloud contracts came from OpenAI, XAI, Meta, Nvidia, and AMD. To the point where the company is now calling themselves the go-to place for AI workloads. Let me do a Control F. I want to see who said that. The CEO. All right, is that the very first statement? Yes, it's the very first statement. That's crazy. Clearly, we had an amazing start of the year because Oracle has become the go-to place for AI workloads. The go-to place, right? Okay, interesting. So it seems that, they're competing quite head-to-head with Microsoft, Amazon, Google. Not bad. All right, so these are the players that led to this crazy increase in backlog. Now, moving on, the company is expecting additional multi-billion customers, RPO likely to exceed half a trillion in fiscal 26. Of course, it's going to exceed. I mean, you're at 455. How much is the expectation for revenue next year? Sorry, in the next quarter. Let me see what the street expects on the top line. So that's revenue. That's nothing. 16 billion a quarter. When you have a backlog of half a trillion, it's nothing. So we're going to look at how the company plans to burn through that backlog. Now, fiscal 2025 OCI, this is the important segment. Again, the company is complex. I'm not here saying that I know everything about the company. Of course I don't. I'm learning as I'm shooting the video. But OCI, I think this is where eyes are looking, yeah? And OCI is that segment that provides computing. So this is now expected to be 18 billion, okay, good, for fiscal 26. And the guidance was raised, apparently. So that would imply 77% year-over-year growth. Not bad. Now, the long-range path for the next 4 years, so I assume that this is year 1, and this will be year 2, and then 3, 4, and 5. It's almost doubling. I mean, let's do a quick math. It's less than doubling, actually. So 32, 18, 77% increase as well. They expect to grow at 77% seriously in fiscal 27. Okay. Then we have 73. Let's see what is the growth rate for fiscal 28. Oh, that's ridiculous. Wow, that's 128%. That's a good growth in fiscal 28. And then what do we have? We have 114. All right, for fiscal 29, 56% growth. Of course, here the law of large numbers kicks in, and the more revenue you have, the harder it is to grow it. And that will be fiscal 29, I believe, 26%. Not bad as a growth, don't get me wrong. It's really good. However, I was expecting something more. Considering this backlog, it seems that it's quite difficult to convert that into revenue. I think most of the data center projects, they take about, 18 months, almost 10 to 18 months to be built. So it takes time. And it says that much of that is already baked into the 455 billion RPO. All right. Now looking at cloud, total cloud revenue, up 27% year over year. So this is the entire segment. And as I've shown before, cloud was made out of 3 subsegments: application infrastructure, cloud services, license, and on-premises. Okay. So that is the overall consolidated revenue. It's not growing that much, So compared to this subsegment, which is the one that really matters, this is the one that investors are keeping a close eye on. That is growing at a ridiculous rate, but it seems that there are things that are dragging down the growth in the cloud revenue. And in fact, I'm going to show you how I use AI to see what those factors are. So what I'm going to do is, just take these statements, bam, there we go, and this one. Yeah, and I'm going to use dictation. Explain in full details what is dragging the revenue growth in the cloud segment, considering the spectacular growth in OCI. The company is Oracle. All right, this is one way to type quickly. I'm just lazy to type. So let's move on. So far, let's not move on actually. Let's see what the street is expecting in terms of the top line. So this is the revenue. All right, when I say top line, for those of you that don't know, it's the same as revenue. Bottom line is the same as EPS. So the top line in the second quarter is 15% growth. Okay, that includes everything in the company, by the way, includes all the other segments like services and hardware as well. Okay, it's not bad. It's double digit, but yeah, it's low. Fiscal Q3 26. Okay, 20%. Okay, then we have 20% as well. 21. Okay, so it seems that growth is only going to start taking off from Q1 fiscal 28, which is the quarter ending in August 2027. So mid 2027, that's when you're going to see growth at an absolute ridiculous rate. But until then, growth is going to be fine, but it's going to be very close to that low 20s double digits, which is fine, but I'm not sure if that's going to support the earliest increase in share price. I mean, I'm just curious to see what's valuation doesn't matter for these stocks. They are narrative stocks. Sorry, that doesn't start buying. But I just want to see how stretched the valuation is. Is it like crazy stretched, or is it just a little bit? No, it's just a little bit. It's not that bad. 66 times next year's earnings. Of course, it's significantly more than peers, but it's not like Tesla, for example. Yeah, on a forward price to cash flow basis, yeah, the company is trading at 37 times next year's cash flow. Not bad. Not cheap. Don't get me wrong. It's not a cheap stock. And I think if you were to compare this with peers, is Meta there? Let's compare it to the other hyperscalers. Let's see how they do this. Edit symbols. Yeah, I'm going to compare it to the hyperscalers. So it's going to be Meta. That's going to be Amazon. That's going to be Google. That's going to be Microsoft. All right, let's see. So on a valuation basis, we have the forward P ratio. This is the one that matters. Yeah, 66 times is more expensive than any of these hyperscalers. That's not very, compelling. On a price to cash flow basis, the company is double the price of the others. Yikes. Let's see the growth. So we have revenue, 3-year compounded annual revenue, growth rate, 10%, in line, I will say. 5 years, and I think this is the historical, yeah? So this is not the next 5 years, I think this is the past 5 years. All right, so let's see the forward revenue growth. It's in the middle, it's less than Meta, more than Amazon, which is good, more than Google, more or less the same as Microsoft. Yeah, all right. Profitability, less than Meta, more than Amazon, that makes sense. More than Google, okay, that's not bad on a gross profit margin. And it's pretty much the same as Microsoft. All right. Seems like Oracle and Microsoft are quite close on some metrics, not all, of course, not PE. But yeah, I see the company is quite head-to-head. Free cash flow margin, wow. But that makes sense because the company is investing, of course, in data centers, and they don't have the businesses that these big boys have to fund the Capex spend. EBITDA margin, that's fine. Net revenue per employee, yeah, you can see the difference. Yeah, Meta, almost $1 million. Microsoft, almost $1 million. So it seems that they have a lot of employees, or maybe not a lot of net income. On the net income basis, actually, they do have. So the margin is 21%. It's not that bad. I think it's only better than Amazon, which makes sense because this is a retailer. Most of the revenue comes from the retail business, and AWS, it's only contributing to the bottom line. All right. Interesting. So this is the performance. Of course, Oracle is going to be at the top of the list, considering the the last run we had. All right, I'm not going to go through this rabbit hole because it's probably going to take me hours to see every single metric, and it's not going to help me in terms of the stock. It is definitely a narrative stock, and I want to see that the narrative is going to sustain. So let's see what other things the company has to show aside from RPO. All right, OCI revenue. So this is the Oracle Cloud Infrastructure, was up 54%. Okay, that's good. And the consumption, all right, so I believe let's see what they mean, consumption revenue. Yeah, so they mean that the contribution of OCI to the cloud revenue was up 57% year over year. Exactly. So yeah, that contribution increased. So the cloud revenue is now more weighted towards OCI rather than the cloud database services. All right, yeah, the annual run rate is nearly 2.8 billion. That's not a lot. And that's an annual, yeah. And OCI in one quarter, it was 3.3 billion. So cloud database services, not much. Autonomous databases, 43%. Yeah, I don't know. When they don't share the figures from the quarter, it means that they are insignificant. So moving on. Database momentum and multi-cloud expansion. Multi-cloud is quite interesting. So the company has racks in other competitors' data centers, and they run tasks from those racks, which is a bit strange, I have to say. I'm not sure why they do that. So it seems that the business is taking off, but it's not a lot. So it seems that 15x in Q1. 34 multi-cloud data centers live inside Azure, so Microsoft, Google, and AWS. These are the hyperscalers. And 37 are planned for this year, totaling 71 multi-cloud data centers. So this is where the company is installing racks in the facilities of these guys. And it says that multi-cloud supports database growth and customer reach. Maybe, but I'm not really sure. Actually, let's do that as well. I'm quite curious to know. Multi-cloud database. Yeah, so explain why Oracle has a multi-cloud database revenue stream, because it doesn't make sense. Why would they host those racks at competitors and not at their own data centers? That's what I don't get, Why would you? I mean, maybe you don't have enough capacity, but if you don't have enough capacity, why would you do that? Maybe it's a low margin service. I don't know. Something to look at. Moving on, strong application performance. So application revenue up 3.8 billion. Okay, 10%. Back office up 16%, double-digit growth. That's fine. By the way, there was a question I asked before on cloud revenue and what is dragging the segment. All right, so it seems that Oracle's cloud app are the drag. So they're growing at 10 to 11% year over year, and they still make up the bigger slice of Oracle's cloud. So they pull the blend. All right, that makes sense, despite the surge. So if I go to look at fundamentals and I look, that's the problem. I mean, you see it here, probably you don't, but the problem is the company changed the financial reporting in the last quarter. Yeah, and because of that, you have the usual softwares to visualize this growth, which, we have Fiscal AI. This is the one that I use. And the problem is that cloud revenue, before it was cloud services and then infrastructure cloud, and now all those are combined into cloud revenue. So I'm not able to see anything compared to last year. Actually, yeah, the company did provide that, which is year over year, so you can see the growth. But aside from 2 quarters, you don't have information on any other quarters. So you can't really do a historical analysis on cloud revenue, which really sucks. I mean, when you look at applications, this is the one that I believe. Applications is not the one that takes most of the revenue, right? Because you can see it in blue. You have infrastructure, cloud, and licenses. So these are the applications and license support. So most of the revenue is coming from infrastructure. I wonder why. Why did they say that? So OCI, infrastructure as a service, was 3.3 billion, up 55% year over year. Right. And I know why. So if it was 3.3 billion, half of this revenue comes from support. That makes sense. Yeah, that makes sense. Because that's in blue, what you see there is infrastructure, cloud services, and license support. And because infrastructure cloud was 3 billion in Q1, it's not a big stretch to assume that it was more or less the same in Q4 fiscal 25. Therefore, this 6 billion, all right, most of that comes from the license support. Okay, good. That makes sense. That makes a lot of sense. What grew much slower? So cloud applications were 3.8 billion, 11% year over year. Exactly. And the blended results led to this deterioration of 27%. 28% in USD, but I think the company needs to use a constant currency, which means that they make revenue outside of the States. Let's see what is their exposure abroad. So outside of the States, we have Americas. Actually, let me just look at the common sites. I want to see. Most of the revenue comes from Americas. Okay, so 65% coming from Americas. Then you have Europe, Middle East, 23%, Asia, 12%. Okay, so yeah, most of that comes from the US, but not all. So 35% is outside of the US. Actually, outside of Americas, and by Americas, I think they mean Canada as well. All right. Okay. Moving on. Actually, we had a query earlier. What's this multi-cloud database? All right. Let's see. What's the deal with them with this? What's the deal? I don't get it. Follow the apps. Okay. Most enterprises already run apps in Azure, AWS, or Google Cloud. Putting Oracle database inside those clouds gives customers low friction adoption and lets them pay for it on the platform they've already committed spend. All right. So it's to simply integrate that, all right, the platform, Oracle database. So the company is owning the high margin layer, but not the building, which is the one that's leading to the depreciation. And of course, that hurts EPS, GAAP EPS. And of course, they're co-located in partners' data center and managed by Oracle's operations team. So it's less hosted by a competitor and more like an Oracle mini region next to your Azure, AWS, and Google Cloud. Wow. Okay. Not bad. So that's what they do. Okay, that makes a little bit more sense because that's an integration rather than competing against a competitor using their data centers. That wouldn't make sense. Moving on, demand outstrips supply, which makes sense because you have a freaking backlog that's over 10x your revenue. Okay, that's logic. Next, fiscal 26 revenue target reiterated. Growth, you see, growth is really slow, 16%. Let's look at the annual figures. So on an annual basis, if you look at the top line, it's disappointing, 16% this year. I don't know. Does the share price really deserve to be there considering this growth? Next year, the year ending in fiscal, it's such a complicated quarter. The year ending on May 2027. God damn it. I hate these companies that don't report accordingly, like most of the Mac 7 do. Not all. Microsoft, I think, is another exception. So May 2028, this is where the fun begins. So 2028, as I said earlier, this is when shit hits the fan. And I think it's because it will take 3 years. That's a lot, 3 years to build data centers. Something is going on here, and I want to know. Let's find out. Let's find out. So it seems that the street is expecting a major outperformance of Oracle in the fiscal year ending May 2028. I want to understand what are the exact drivers for the outperformance in the fiscal year ending in May 2028 versus 2027 or 2026. What is the main revenue driver? Let's see what AI is going to do in this case. By the way, you're welcome because I'm using ChatGPT Plus. I'm not using ChatGPT Pro yet. I want to give it a try as well, but one prompt, it will take 10 minutes to get a reply. And these videos are already difficult to consume, using the fast version of ChatGPT. If I use the deep reasoning version, it's going to be a hell to consume this kind of content. So let's leave it there. And see why. I want to understand what's going on in 2028. All right, back to the upside analysis. We have Q2 total revenue 14%. Well, the range is between 14 and 16% year-over-year growth for the next quarter. Cloud, this is the important one. Okay, I see better growth here, 33 to 37. And how much was it in the last quarter? Cloud was 27. All right, so it's a sequential increase. At the midpoint, it seems to be almost 8 percentage points. Okay, nice. So cloud is taking off, which is good. And I think that's why the street projects such a late increase in revenue growth, maybe because it will take so many years for the cloud infrastructure to really take off. All right, something to consider there. Q2 non-GAAP earnings per share up 10%. Well, the range is between 10% and 12% year over year. Not bad. So the currency, of course, there's a currency headwind. 3 cents, that's nothing compared to the EPS. And 1% to the top line. Currency. And in this case, I believe that the currency tailwind comes from a weaker USD. So you make money abroad, you bring it to the US, and because the US is weaker, you make money. And that's how this weird currency headwind works. Differentiated AI databases and secure LLM access. New Oracle AI database vectorizes enterprise data. Okay, that makes sense. Similar to what Palantir is doing. All right, they take your data and they make sense of it. I don't think, of course, this is nothing like ontology, all right? I think they just take a few freaking documents and they vectorize them. It's the same when you upload a PDF to ChatGPT. It's using a vectorization to make sense of what's inside that PDF. So that allows customers of Oracle AI database to directly use ChatGPT, Gemini, Grok, Llama in Oracle Cloud. Okay, that's an interesting upside. That's a very interesting upside. So they can use these apps directly. Oh, okay, that can be something big. And possibly competing with Palantir, because if you have your database in Oracle Cloud and you can integrate these LLMs, if that data is properly vectorized and properly mapped, I think that can be a very interesting upside. Okay, enable secure reasoning over private, public data, ChatGPT-like Q&A. Exactly, that's what I'm saying. ChatGPT-like Q&A on enterprise data. So you have your data and you ask. In the same way that I have the earnings call and I ask, what's the upside? You can have your own company data and ask, who should I fire? Not bad. Management claims first mover delivery at Oracle AI World. A first mover delivery at Oracle AI World. What the hell is that? Right, let's go through a rabbit hole. Let's see. Okay, let's go back to the other topic, which was what is driving revenue growth in 28. So we have management new long-term plan has Oracle's cloud infrastructure revenue going from 18 billion to a 2x jump year on year. So that incremental 41 billion versus fiscal 27 is the single largest driver behind the street's steeper trajectory. Wait, what? I don't. And this is the earnings results, yeah? Let's see, OCI. What is the outlook? Where did that came from? Ah, shit, I closed the wrong. Okay, so it says that management's new long-term plan has OCI going from 18 billion to freaking 73. And that's a 2x jump year on year. So if I go to the upside analysis, now I know, all right, it's here. You see how smart it is, you know? Why do you even watch these videos? You don't need to watch these videos and waste your time. There you go. 73 billion. You see this? And that's exactly what I shown earlier when I pull up the freaking calculator and I went through all the expected revenue increase. 32 billion, that's 2x more or less. And then 73 billion, which is over 2x. And that's exactly what this thing is saying, you know, 73 billion. You see what I mean? It's insane, you know. It's so smart that you don't need to watch YouTube. I mean, that's exactly why I'm working on an app that is going to save you the time of listening to weird guys on YouTube talking about stocks like they know it all. Because they don't. I have no fucking clue about this shit. The reason why I know how to move in the market is because I know how to use AI and I know how to find things. So it seems that this OCI subsegment is what's driving growth. And that's incrementally 41 billion versus fiscal 2027, which it's most likely the big contributor. In fact, 41, if I look at the street's expectations again, it's crazy. Just look at that. You got, it's not even fully priced in, right? Because you have 81 billion, which is the expectation in this fiscal year. And then you have a jump, which is 30, or about 30 billion, more or less. And management expects that increase to be higher. So management expects an increase to be 41 sequentially. So even the street is actually taking these numbers with a pinch of salt, which is good. It seems that they are not really trusting the figures. Not bad. All right, Oracle says most of that 5-year OCI plan is already booked in the record. Yeah, that makes sense. Okay, I'm not going to go... So the company is building over 37 additional multi-cloud data centers to hyperscaler partners. We already know that. These are not actual data centers. They are just installing racks in competitors' data centers. AI compute availability. They are deploying the next-gen Nvidia, the GB200s. Are you joking? Okay, so that's from March. Oh, right. Because I was thinking that, you have the GB300 Ultra available this quarter, deployed in the last quarter. So, yeah, I think that the focus right now is on the GB300. All right, that makes sense. Okay, with that, let's move on to the next topic. Capex. This is the one. Low-cost private cloud. All right, so private cloud, I don't think this is going to have any success, and I think this is a drag for the company. Since they have a rack called Butterfly, so 3 of those racks for $6 million would enable enterprises to host Oracle Cloud, on premises. Why would you do that? Unless you're a sovereign or you have restrictions on, by law, like you need your data to be secured in premises with a lock, then yeah, but I don't think this is going to be what major enterprises are going to do, because most of them are going to use Oracle Cloud, in the cloud, not on premises. Capex, 35 billion. That's peanuts for the entire year. You see what I mean? The company doesn't have a side hustle like Meta does. They sell ads. Like Google, they sell ads as well. Interestingly enough. Or Amazon, they sell stuff. Or Microsoft, they sell subscriptions to stuff. So Oracle, it's not nearly as well funded than those big boys, and that's why the capex is really shit. It's 35 billion, and in fact, let's have a look at the cash flow statement. Hopefully, we have a good cash flow statement. Okay, so it seems that this populated the data, which is fine. Operating cash flow 8 billion, fine. Capex. You see what I mean? It's so easy to do analysis on this stock, because pretty much everything the company makes from operations is being burned in capex. You see, so it's almost a mirror, the chart. So operating cash flow is up, capex, capital expenditures, is down. And you can see that when they make 8 billion in operating cash flow, that goes to fuel the data center build. Of course, seems that was an exception in Q4 25. All right, this is a bit concerning because it makes me think that the company doesn't have a lot of cash. Expected, because they don't have a side hustle that is as big as Meta or Amazon. Only 11 billion. You're joking. That's nothing. Nothing. Look at the chart. They don't have cash. Which means are they gonna dilute investors to grow? It doesn't seem like they're gonna do that, but it's a risk, huh? Let's see what the downside is. So looking at the downside, the first one is they are supply constrained in their infrastructure segment. Of course they are. They have more demand than supply. That's not surprising. Okay, one of the Edison. Who's Edison? The CFO? No, the CTO. The company is running out of inferencing capacity. Okay, and they want to take all the capacity that you have that's currently not being used anywhere in the world. Imagine that. So OpenAI possibly is like, give me everything, even if it's in a freaking God knows where. Give me the capacity. Wow, they're hungry. They're hungry for computing. Next, we have Capex plan. Okay, that's going to go 35 billion. That's not a lot. Multi-cloud data centers, it's not the right way to expand because, if you have your racks in other hyperscaler, that's crazy. If you have your racks at Microsoft, they're going to charge the hell out of you. So I don't think that's a good margin business. Higher than guided tax rate. Okay, that's not a headwind. I mean, it is, but not something concerning. Negative free cash flow from Capex. As I said, pretty much everything that the company makes in operating cash flow goes out in Capex. So free cash flow is almost zero. Like, let's just have a look. It's zero. It's zero or negative. Let's look at the annual figures, because you're going to see what happened before the AI boom and after. Free cash flow, bam. You see what I mean? It's crazy. You have the AI boom. So this is fiscal 2025, which began in May 2024. The company was late in the AI boom, by the way. So that year, this is when they started to invest in Capex. And you can see it actually here. If you plot the capital expenditures, you can see exactly that fiscal year is when the investment began. All right, nice. Any other headwinds? Let's find out. All right, example of acceptance cycle, 1 week from large haul. Yeah. So within 1 week, the customers are already absorbing the Capex. Sorry, the the GPUs. All right, 4x variability. That's it. That's it. All right. So that's the upside and the downside analysis. I'm not going to go through the earnings results because that's pretty much, I said it there, And what's this Oracle AI World? This was a catalyst, in Las Vegas. October 13th to October 16th. It features keynotes, hundreds of technical sessions and labs, hands-on demos, and partner exhibits. So this is a flagship customer conference, rebranded from Cloud Worlds to, yeah, of course, Oracle AI. That sounds even better. Okay. I wonder why they mentioned that. Let's see. We have they made it easy for our customers to directly connect all the databases, all their new Oracle AI. Oracle AI next month is we have taken all of our customers' data, all of it. I want to go into the details now. We have tremendous advantage in AI inferencing. Again, we will demonstrate at Oracle AI World. They have to demonstrate the advantages in AI inferencing. Is Oracle buying from Broadcom? Because those XPUs are specialized in AI inferencing. Huh. Why am I even asking? Let's find out. All right, in the meantime, let's have a look at what the street expects on the bottom line. So we've already seen, right, the fiscal year ending in May 2028. So between mid 27 and mid 2028, that time frame, you're going to see a lot of growth, 40% year over year. That's a good moment to have shares in the stock. In the meantime, I'm not that concerned. I'm not that happy, sorry. 16% growth. I mean, what the hell? You're looking at something more than that. And the revenue is not a lot. It's not, 67 billion is a lot, but compared to Nvidia's, maybe not that much. Yeah. Yeah, the bottom line is the same. May 28, you can expect a big amount, 36% year over year growth. And the same is in May 29 and May 2030. So yeah, those 3 years. I don't think it's a good idea to be too early to the party, because this, I don't know how long it's going to last. I mean, you always see the pullbacks, and the pullbacks are always the previous support. I mean, just look at what happened here, yeah? This was what the degenerates call as a resistance. Sorry, just pressed a weird shortcut. So this is the resistance, yeah? More or less. Breakout, and then you can see the price consolidating around this level, and then it takes off. So the next time it breaks out, which is here, you see it breaks out, tests again, and then it continues to rally. What happens is that during a sell-off, and this was an external sell-off because of the Trump's tariffs at the beginning of 2025. So what happened there is that the price looked for the previous support, which in this case, it was here, yeah? And then it rallied. So you can see here, it was almost the same, but it didn't really test it again, the 200s. I don't know. So far, I don't think it's going to retest the 260s, but maybe the 300s, maybe, which is not a lot. How much is that? 10% is 30. Yeah, it's less than 10%. Maybe a 3% move down. I don't know. It's definitely an interesting stock. If you have a time frame of 5 to 10 years, it could be interesting, but not for me. My time frame is usually a few years, 1-3 years, not 10 years. So in the meantime, let's see what we have. There is no public confirmation that Oracle is buying Broadcom's XPUs. What is public? So Broadcom announced a 10 billion order, okay, from a new unnamed customer, widely reported to be OpenAI. Okay, of course, it's not Oracle. Meanwhile, Oracle's own recent hardware orders that are reported by name are for Nvidia's GPUs. Okay, yeah, so those are the orders as part of its AI buildout. As of the 11th of September, OpenAI, Broadcom, and OpenAI and Oracle, yeah, massive compute on OCI, no verified Oracle and Broadcom XPU purchase. This could be something big for Broadcom, maybe. Because if the company is saying that they are excelling at inferencing tasks, I think it was here, at AI inferencing, Broadcom took off, Broadcom took off after earnings. And if they say now that they're buying these freaking XPUs from Broadcom, this shit is going to rally even more. So, well, something to consider. Not bad. That's a very interesting point. So, no confirmed partnership between those two. That's really compelling. All right. Overall, my view is that for me, considering my time frame of 12 months, 24 months, it doesn't look very good. And the reason is because I'm not happy with the EPS growth, 13% this year, which is not a lot. And then the top line growth, which is 17%. Yes, it's better, but I don't know. It's 40% is more, so I think that I will be a bit more confident around mid 2027. Yeah. Until then, mid 26. Until then, I prefer to stay on the sidelines. I don't think I will add this stock to my portfolio. It just doesn't make that much sense. Maybe it's gonna sell off. Yeah, if it retests the 260s, maybe I will consider opening up like a small speculative position. But at this level, I'm still not confident enough. So, anyways, let's see what happens at the Oracle's. What was the events? Cloud Oracle AI World event on October 13th, which is in less than a month. Well, more than a month. Yeah, let's see. I'm quite curious to see if they announce anything exciting with Broadcom. Anyways, thanks for watching, and I hope to see you next one.